Hello everyone, amazing start to the year. We did very well today in the group. We traded very well today. So in today's video, I'm gonna go over what the next steps are for the market. Obviously I wasn't here for the past few days. I wasn't feeling too well. So happy new year. I hope you guys have had beautiful holidays and a beautiful New Year's Eve, all that good stuff. So yeah, in today's video, we're going to take a look at what the next steps are for the market. And we're going to take a look at the S&P, the NASDAQ, the Russell, the dollar, the bonds, the VIX. And if we're going to basically everyone is wondering, are we going to hit 460 on the SPY? That's really a number a lot of people are thinking about. So we're going to take a look and see if that would be possible. All right, so without further ado, let's get started with the video. All right, so number one, we can see that this is an SP 500 index seasonality chart. So over the past 20 years, on average, what ends up happening with the S&P during January? We can see that during the beginning of January into the middle of January, we end up pumping and we end up doing well. So seasonality wise, the beginning and the middle of January ends up being very bullish. Okay. So obviously currently that's not really the case because we had 9 green weeks in a row, right? So now this is the week afterward and we're currently down 1.69% for the week. So obviously we are not having a very bullish beginning to January. And that makes sense because we had a monstrous rally. Getting a weak pullback is completely normal. I was saying that we would be leaning short and bearish all week, essentially, because there had to have been weakness in the market, and that is currently what we're seeing right now. So the first 2 weeks of January, seasonality wise, should be bullish, but currently it is not, and it makes sense why it's not. Okay. So to get a proper understanding of where the indices and where the stocks are going to go, we have to look at other things as well. So this is a chart of the VIX. So the VIX, when it's trading above 1350, 14, etc., it is very bullish. And it is actually bearish for the market because the VIX has an inverse relationship to the market. If the VIX is doing well, then the overall market is doing bearish. So we can see that the VIX is starting to push upwards on the upper Bollinger Band. It's trading above 1350 and it's trading above 14. So that is bearish overall for the market. The yields are another indicator that we have to look at. The yields also have an inverse relationship to the market. If the yields are doing well, then that is generally bearish for the market. And we can see that the yields are bouncing. So this is also bearish for the market. And then last but not least, the dollar also has an inverse relationship to the market. If the dollar is strong, then obviously that is also bearish for the market. Currently, it's doing pretty well. So all three of these are showing that there is more weakness in the market. Okay. So now what's interesting though is when we look at the large tech stocks, for example, namely, for example, Apple. Apple is very far overextended to the downside in terms of the Bollinger Band. This is a clear cut. One of the most favorite trades that I like to take is a retracement back within the Bollinger Band. Now, what's interesting about Apple is algorithmically, we are very overextended to the downside. We should be getting a bounce. Getting calls for 1 to 2 months out makes the most sense. So Apple is leaning to a bit of a bounce. We're very overextended to the downside. So if Apple gets a bounce, then you would assume that the rest of the market could also get a bounce. Okay, so that is one thing that I want you guys to take into consideration in terms of stock prices themselves. Okay, so that's Apple. When taking a look at Nvidia, we're going to just siphon through all the large tech stocks now. All right. So Nvidia is not looking too strong. We can see that it's failing at this 486 level. AMD is also not looking strong at all, but it's holding the support. And we still haven't even came back and tested the 140 level. Meta is not doing too well either. It's very similar. All of these setups are very similar. Okay. Amazon is actually holding support. It dropped very, very dramatically. It's holding support here at 143.63. Amazon actually looks like the most overextended to the downside, and it came to a major level of support. So Amazon could be a good long. Amazon could be a very good long, actually, if it gets closer to 143. Could definitely see some swing calls into Amazon, to be honest. So Amazon is getting very close to a point where it could bounce. Apple is also getting very close to a point where it could bounce. Netflix is very similar to Nvidia and the others. Google doesn't look great, but this is not an opportunity to go short. So this is not a shorting opportunity on Google. Obviously, it looks weak. This is not a bullish setup, but this is not a time to go short. Instead, it's either a time for a big flush or a bit of a bounce. A big flush or a small bounce, okay? And then last but not least, Microsoft. Similar to Tesla, similar to Nvidia, AMD, and Meta, etc. And then Tesla looks similar-ish to Amazon. So a lot of these stocks, they don't really feel like they have that much more room to go. Especially Tesla, Amazon, and Apple. They don't feel like they have a lot more room to go to the downside. Yes, the yields, the dollar, and the VIX are showing strength, but these large tech stocks, they might have basically the most bearish scenario. Okay, so the most bearish scenario on these tech stocks, for example, Amazon, is if we get a small bounce tomorrow, small bounce, maybe 146 would be the top, and then a continued move to the downside. If we end up getting another red day tomorrow, that would be very, very bullish, in my opinion. So that's my thought process. If tomorrow ends up being red on Amazon, that is a really, really good long opportunity, in my opinion. If tomorrow ends up being a bit green, then you're forced to basically go long at this level of support. But that is not as bullish. It would be more bullish. Once again, let me repeat. It would be more bullish if we had another red day tomorrow. And yeah, basically we have to see if that ends up playing out. The main things are these large tech stocks are starting to show some sort of bottoming out. And yeah, the other thing that I want to show is that on the indices specifically, right? We're creating falling wedge patterns. Falling wedges are extremely bullish patterns. We got a bit of a bounce today, earlier on in the morning, right? We saw some strength. But now, right, we are making newer lows. And this move to the downside to 464 is possible. It's very, very possible, because the fact that we could not hold above 468 is a major, major level of resistance. Okay. 468 is a major, major pivot point on the SPY. If we can hold above 468, then that is very, very good. If we trade below 468, then 464 is on the table. But we basically need to start showing some strength above 468, especially tomorrow. In my opinion, we really need to see some strength above 468 tomorrow. That would be ideal, honestly. And for bulls. If not, then we could definitely see some more weakness. 464. And then this zone between 462 to 464 would be an ideal position where people would want to start going long. Because trying to long for longer term calls over here close to all-time highs is not good trading. What you would rather do is you would rather wait for a pullback to either of these two zones here. So between 455 to 458 or 462 to 464. So that's currently the trajectory of what's going on. The only way that we drop down to 464, in my opinion, is if tomorrow ends up being very, very bearish, or if tomorrow we get a bit of a small bounce in the tech stocks and then another move to the downside. So that would be actually very bearish. If we get a small green close on tech tomorrow that in the grand scheme of things would force people to go long, but it's not an entirely bullish setup. So what I mean by that is it would be very, very bullish for another move to the downside, similar to Amazon, Tesla, Apple. I want to see another move to the downside. That would be the most ideal situation. But they're not most likely not going to give the most ideal situation. Instead, what they're going to most likely do is they're going to give a small bounce. So if they give a small green bounce, you're going to be forced to hold and get into calls basically with a stop loss at 396, right? At this low here. And then, so basically if we make this a small green candle, great. We close here. This would force people to go long, and then that would cause a sharper move to the downside, which would be the equivalent of SPY 464 to 462 area, in my opinion. So that is basically, it's tough. It's not safe, but the best opportunity, in my opinion, to go long would be if we show weakness again tomorrow. If we show weakness again tomorrow, that would be a really, really ideal spot to go long Amazon specifically. That's my thought process on that. So, yeah, I hope that makes sense. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning with the live stream in the Discord and the signals. So today we went 80%. I don't have them typed on the chart at the moment, but we did really, really well today as well. And yeah, things are looking really, really good to start off January. So yeah, I will see you guys tomorrow, and I hope you guys have a wonderful Thursday night. Take care.